10 years ago, three assets stood at the center of one of the most heated debates in finance. One was ancient, trusted for thousands of years. Slow, heavy, predictable. One was brand new, digital, volatile, explosive, almost unbelievable. And one was quietly doing its job in the background. No hype, no headlines, just compounding. Gold, Bitcoin, the S&P 500. If you had put your money into each of them 10 years ago, which one actually won? The answer is not what most people think, because the real story isn't about returns. It's about survival, and most people don't make it past level 3. Let's start where everyone begins. Level 1, the spectator. You don't invest. Not really. You watch. You scroll through headlines. You hear co-workers talking about crypto. You see tweets about market crashes. You save a few videos, maybe even this one. Your income covers your expenses. Barely. Your lifestyle is stable but fragile. One emergency and everything shakes. Your mindset? Caution mixed with curiosity. You want to grow your money, but you're afraid to lose it. So you stay on the sidelines. And here's the mistake. You think doing nothing is safe. But over the last 10 years, doing nothing meant losing. Inflation quietly eroded your purchasing power. Every year, your cash bought less. While you stayed still, everything else moved. And that brings you to the first decision. Do you protect or do you grow? Level 2, the protector. This is where gold enters your life. You've heard it before. Gold is safe. Gold holds value. Gold protects against inflation. So you buy some, not a lot, just enough to feel secure. Your income is slightly higher now. Maybe you've saved a cushion. Your lifestyle is still modest, but there's less panic. Your habits? You think long-term, but you act cautiously. Your mindset? You don't trust the system completely. You want something real, something physical, something that can't disappear overnight. And gold gives you that feeling. Over the last 10 years, gold did grow, not explosively, not dramatically, but steadily. It protected. It held its ground. But here's the uncomfortable truth. Gold doesn't make you rich. It makes sure you don't get poor slowly. And for some people, that's enough. But for you, it starts to feel limiting because then you see something else, something moving way faster. And suddenly, protection doesn't feel exciting anymore. Level 3, the chaser. This is where Bitcoin pulls you in. At first, it sounds insane. Digital money, no government backing, wild price swings, but then you see the numbers. Over the last decade, Bitcoin didn't just grow, it exploded. We're talking returns that make every other asset look slow. And that's all you need. You enter. Your income hasn't changed much, but your ambition has. Your lifestyle starts shifting. You take more risks. You talk more about investing. You check prices constantly. Your habits? You chase momentum. Your mindset? If I don't do this, I'll miss out. And for a while, it works. Your portfolio skyrockets. You feel unstoppable. This is the moment most people believe they figured it out, but they haven't seen what comes next. Because Bitcoin doesn't just go up. It crashes. Hard. We're talking 70, 80% drawdowns. Your $10,000 becomes $3,000, then maybe $2,000. And here's where everything changes. Because it's not about returns anymore. It's about behavior. Some people panic. They sell at the bottom. They swear off investing forever. Others double down. They leverage. They take loans. They try to recover faster. And that's where financial lives end. Not because Bitcoin failed, but because they misunderstood what they were holding. Bitcoin isn't just an investment. It's volatility in its purest form. And if you treat it like safety, it punishes you. But if you survive this level, everything shifts. Level 4, the realization. This is a turning point. You felt the highs. You survived the crashes. And now you start asking better questions. Not which asset goes up the most, but what is each asset actually designed to do? Because here's the truth nobody tells you early on. Gold is not meant to grow fast. Bitcoin is not meant to be stable. And the S&P 500 isn't meant to be exciting. They each serve a completely different role, and comparing them without context is the biggest mistake investors make. Gold is a hedge. It protects purchasing power over long periods. Bitcoin is a speculative growth asset. It offers extreme upside in exchange for extreme volatility. And the S&P 500? It's a machine, a system of businesses constantly generating value. And over the last 10 years, when you include dividends, it delivered strong, consistent growth. Not flashy, not viral, but reliable. And here's the part that changes everything. Most people who chase the highest returns didn't keep them because they couldn't handle the volatility. Meanwhile, the quiet investors, the ones who stayed consistent, they compounded, and they moved to the next level. Level 5, the builder. Now you're different. You're no longer chasing. You're constructing. Your income is higher. You have surplus capital. Your lifestyle is more stable. You're not reacting to every market move. Your habits? You invest regularly. You think in decades, not days. Your mindset? You understand that wealth is built through systems, not guesses. This is where the S&P 500 becomes your foundation. You start allocating consistently, month after month, year after year. You don't try to time the market. You don't panic during corrections. You let businesses grow, and you participate in that growth. And over time, it works. Your portfolio doesn't explode overnight, but it grows steadily, predictably, powerfully. And here's the key difference. You sleep at night because you're not depending on one outcome. You're building a base. But something interesting happens at this level. You don't ignore Bitcoin anymore, and you don't abandon gold either. You start to see the bigger picture. And that leads to the level most people never reach. Level 6, the allocator. This is where real investing begins. Not picking winners, not chasing returns, but balancing risk. Your income is strong now. Your lifestyle is comfortable, but controlled. Your habits? You think in percentages. You think in allocation. You ask, how much risk do I actually need? Because now you understand something critical. The goal is not to maximize returns. The goal is to maximize risk-adjusted returns. That means getting the best possible return for the level of risk you're taking. And suddenly, the conversation changes. Gold is no longer boring. It's stabilizing. Bitcoin is no longer crazy. It's a high-risk, high-reward component. And the S&P 500? It's your engine. You start building a portfolio that reflects this. Maybe 60% in equities, a small percentage in Bitcoin for asymmetric upside, a portion in gold to hedge against uncertainty. Each piece has a job. Each piece serves a purpose. And here's the surprising truth. When combined correctly, these assets don't compete. They complement each other. During market crashes, gold may hold steady. During bull markets, the S&P 500 drives growth. During speculative cycles, Bitcoin delivers outsized gains. You're no longer betting. You're orchestrating. And that changes everything. But there's one final level, and it has nothing to do with assets. Level 7, the controller. At this level, you realize the question was wrong from the beginning. It was never about which one won over the last 10 years. Because that answer is simple. Bitcoin had the highest returns, but also the highest volatility, the deepest crashes, the greatest emotional cost. Gold preserved value, but didn't create massive wealth. The S&P 500 delivered consistent growth with manageable risk. But the real question is this: which one helps you win? Because investing is personal. Your income, your responsibilities, your time horizon, your tolerance for risk. Two people can invest in the exact same asset and have completely different outcomes. One panics, one holds, one loses, one wins. And that's the final realization. Wealth isn't built by picking the best asset. It's built by choosing the right strategy for you and sticking to it, because the market doesn't reward intelligence. It rewards discipline. So where are you right now? Are you still watching from the sidelines? Are you chasing the next big thing? Are you building or balancing? Because each level comes with a different mindset, a different strategy, a different outcome. And the next 10 years? They won't be decided by gold, Bitcoin, or the S&P 500 alone. They'll be decided by how you use them, not which one wins, but how you play the game.